Aha. Okay. Well, I think I finally got my hardware issues resolved here. What I wanted to do was just take some time to go over the primary form of analysis that I use for trading. It's a Fibonacci-based system. Everything I learned about this system, I learned from David Halsey over at E-mini Addict. So if you're interested in it, I suggest you go over there and have a look. I am frequently over there in the chat room during the day, and there's a wealth of information on how this works over there. So this is a sort of one-off video I wanted to do just to demonstrate how the system works. I'm not going to make a habit of making videos. I haven't really done it before, so I'm just going to sort of stammer my way through this. But the system is based entirely on fibs, and the idea is to use them to identify precise entry points and precise profit-taking targets. So the way I define my fibs is there's really only 4 important levels that show right here. So the 50% levels are levels that we those are our entries. Those are the levels that we expect trades to occur at that will get us into the trend. The 61.8 line here represents the failure of the trend. If price here came below the 61.8, we would consider that a trend failure, and we would look for a trade in the opposite direction. The 23% line is our typical profit target, where we usually try to bank whatever it is we've made on the move up. And generally speaking, even extended moves will not exceed this minus 61.8% line. So if you're entering a market condition where things are extremely bullish or extremely bearish, sometimes you will see price go right through your target. And if it does that, usually it will stop before it pierces the minus 61.8 line. If you use Thinkorswim and you want to set up your fibs the same way I have them set up here, here's the way I have them set up. So you can pause this and copy those down if you want. So let me get rid of these, and let's take a look at this recent 2-week rally we've had on the ES here. What I'm going to do here is I'm going to go through the process that I normally go through in identifying the levels as they trade during the day. I'm going to be focused specifically on the bigger picture because it's these larger it's these larger pulls and these larger Fibonacci's that are what actually define our trend and allow us to identify when the major trend actually fails. Clearly, within these larger trends, there's plenty of smaller moves that can be traded, and generally speaking, those are the moves that we do trade. But it's extremely critical that we know where we are in the bigger picture, so that as we're placing our trades on the smaller time frames, we know what the target is on the larger picture. We know what the entry was on the bigger picture, and we know whether we're entering a counter trend trade or a trade with the trend. I'm not going to spend any time considering a time of day or look at gap fill trades or anything like that. I'm just going to strictly rip through this with the technical analysis that I would normally do and show you guys how it works. So there's two kinds of moves basically. Let me zoom in on this a little bit so I can step through this in a way that makes sense. A little more. Zoom in like that. Okay, so it's important to recognize when the trend changes on the bigger level, obviously, because the sooner we get in, when the trend has changed in the new direction, the easier it is to get in on the trend, and obviously the more potential profit there is to be made. So there are two basic kinds of pulls with this system. The most common is called we call it a measured move. And a measured move would be a pull from a low to a high in a range. And we can see that the market is trending up here, and then it pulls back, and then it's trending up, and then it pulls back, and then it's trending up, and then it pulls back. So the more typical moves that you'll see are these measured moves, where we draw from low to high when we're in an uptrend. The second type of pull is called an extension, or it's an extended move or an extension. And those are pulled in an uptrend from high to high. This would be an example of an extension. In a downtrend, you'd be pulling from low to low. So, and I'll explain a little later what exactly it is that causes you to draw an extension instead of a measured move, because it's important to know, but the rules are really pretty simple. So if we slide back in time here, and this is a 15-minute chart of the ES, we are in an extension short at this point in time. We've basically trailed price down, and we've continued to draw our fib lower and lower and lower, and price has failed to come back up and trade our 50% level, and it's sold off some more. So we continue to pull until trade actually comes back up to our level. So we can see here that our extension short here actually traded. We have a target down here at 1058. 1090 was the level. We can see that there was a reaction at this 15-minute candle right here, and then we went up and filled a gap. The little green lines are gap fills, and the purple lines are daily pivots. So let's move forward in time here and see what happens. It looks like here, if we would have taken this trade short, we would have gotten filled at our 1089.55 or our 1089.25, and it would have gone our way for 6 handles or so, and then it came up and probably would have taken us out. I'm not going to go into money management or any of that stuff here. I'm just going to be calling out these levels as I see them. So we've been in a downtrend. We're anticipating that trend to continue. We're anticipating trade to come down to our next target here. As time goes on, we do in fact end up breaking our trend. So this is a trend break. When a trend break occurs, that trade is over. The trend break signifies the point at which this downtrend can possibly turn around. And what we do on a trend break is we immediately draw the next Fibonacci in the opposite direction. So this would be an uptrend pull here, and we would expect price to come back down to our 50% level here to give us an entry for the continuation of the new trend on up. Let's move forward in time. So price does come back down. It gives us an entry and then fails by a tick or two and then fails completely again. Now, one of the things I should point out about trend changes is that when trend changes occur, there is typically some consolidation that goes on in the market. You've got some programs getting out of trades. You've got other programs trying to continue the short trend even after the trend has broken. There is some confusion about whether or not the trend has actually broken. So you'll frequently see immediately after a trend failure that the trade in the opposite direction fails as well. Now, looking at these little candles here, it looks like we may have gotten a free trade and then gotten taken out. In any event, failing this first fib after a trend failure does not necessarily negate the trend failure at all. I would say that if price continued below the low of the trend, that we've got something else going on. And at that point, I would say, okay, something else is going on. The programs have used a different anchor to trade, and this doesn't quite work here. Maybe it's an extension from here. No, that doesn't quite work. Maybe it's so you have to sometimes do some searching to find. But because we haven't failed yet here, the market is indecisive at this point. We failed our next long setup. I would be sitting at this point waiting for the market to actually show its hand as to what's actually going to happen here. So we failed the long. I'll get rid of that, and I will sit on my hands. Now, price came back up here. If we draw the next short, it gets completely blown through. Okay, so to me, this scenario is some confirmation that yes, the short trend broke. We had a little chop down here, but now we're definitely headed in the long trend. This was that day that we had that 50 handle turnaround, if you recall. So just a late day major rally going on here. Now, had this level actually held our 50 here, we would have expected our target to be at 1104. As you can see, we've completely blown through that 23% profit target. Price did not turn back down for the next measured move. We even blew through the 61.8, which is pretty unusual. But when of a measured move, if price literally blows through the 23% target without retracing, that is what causes us to draw the next move as an extended move or an extension instead of a measured move. So what we do is we take the previous high before the breakout, which is this level right here, and we draw from high to high. And so we're now expecting, if we don't continue higher, which we might, we're now expecting this price to come back into our 1108 level and then head up and hit our target at 1224. So placing a trade with the trend at this point, we would be putting a limit order in here at 1108.75 to try and get a fill. So let's see what happens. Okay, price comes back, and the low here is 1107.50. So we get our fill. Looks like we're in after hours here. Okay, now these are 15-minute candles, so we're sort of time warping here. But we got our fill at our extension. Second test holds. Retest, retest, retest. I mean, this happens during Asia. The market's going nowhere, but it's not failing our level. Now Now again, if we failed this 61.8 here, I would immediately draw from the high to wherever that failure is, and I would short the next level. One thing you have to be aware of, though, is that extensions are relatively aggressive. Usually the ES will come all the way halfway back after breaking trend. It's possible that even if this extension fails, we could come halfway back to this level here and then continue up. But let's stick with our plan here at this point until this thing fails or hits its target. So okay, so maybe this shook us out. You know, if we got long way back here and we were sitting through all of Asia, we might have gotten shaken out. We might not have. I mean, if we had our stop below the 61.8, we're still in the trade. We're expecting it to trade up to the 23% target. And okay, so we hit our target. Now, one unique feature of extensions, assuming that price stops climbing here right at our target, we would have taken our profit here. We would have been out. But one unique feature of extensions is that once they start, if price stops at the 23% target of an extension and then retraces, we don't draw it as a measured move, which would be this, sort of from the lows of that trade to the next high. In extensions, instead of doing that, what we do is we draw same anchor, new high. And this is pretty unique to extensions. Sometimes measured moves will do a same anchor, new high, but usually it'll happen in extensions. So let's move forward in time here. Okay, good thing we got out of our trade and took profit because it's selling off. And boom. So we get our entry on the next measured move. Our expected target is 1131. Let's see if we can make it. Okay, we came pretty close there. So another thing I should point out is that these levels are precise. Okay, we came up to 1129. That's not the same as 1131. That's 2 full handles off. That is a huge front run of our target. And as such, we don't consider this trade completed at this point. When you have a trade like this that hasn't yet completed its target, the price action can be anything. Inside this box here, the price action can be anything. We could come all the way back down to the 50% before going back up to the target at this point. So you have to be aware of that. And typically what we're doing is we're trading these smaller trends in here where the same rules apply for trend failure and target hits and all that kind of stuff. But you know, for big picture is what we're looking at here. So we know what our target is for the next trading day of this move that was really initiated at the close the day before. And we trade this stuff in between. So let's see what happens here. Okay, so we hit our target. We did blow through it a little bit, so that creates the possibility of another extension here. It's like a 2-handle blow through. You know, there is a certain degree of chaos to the markets and imprecision, so it could be either. We could be looking at an extension from here, which is actually pretty tight, or we could be looking at a same anchor, new high again, because we hit a 23% target. I'm going to go with the assumption that we're looking at a same anchor, new high, but what I want to do, the high of the previous pull was this 2450, so I'm going to mark it because I don't know where price is going to go. If price continues straight up without pulling back, then we're definitely looking at another extension. If it continues down after, you know, poking over this target a little bit, then I'm going to have a preference for the same extension, new high, which I'm actually going to draw in. So if trade does not come back down to this level and just continues higher, we will wait for price to turn around, and then we will be pulling from this level. And it's critical that it's this level and not this level or this level or this level. And the reason is, I'll point it out again, the reason is that that was the level of our previous same extension to new high. So that would be our anchor in the next extension. Okay, so price shoots straight up. We never came back down into this level. So what I'm going to assume now is that this previous same anchor to new high that we had has blown out of its 23% target. See how it never came back and it went all the way up to the 61.8 and got a reaction? So we're looking at another extension here. I'm going to draw it in. Okay, new anchor, which is a previous high to new high. Now, a failure of this 61.8 would represent a trend failure for us. That would definitely pique our interest. Okay, so you can see we came down and we bounced here. We're into the Asian session again. Holding the 61.8, holding the 61.8, holding it. Okay. Time warp, boom, 23% target hit. So what do we do if we're in an extension and we hit a 23% target? Same anchor, new high. Price turned around right at our 23. Okay, it came back and continued up a little bit. Happens, market's not perfect. And then came all the way back down and gave us a new entry at our 50% long. So we have our new entry and we're expecting trade to go to 11.51 where we'll take profit. The reason I'm stepping through like this is that if I were to show the whole trend here and was just trying to pull fibs in, that the brain has a very good capability of filling in the gaps. So subconsciously, as you're drawing stuff in, you're seeing the 50% levels and you're picking the right anchors and you're picking the right tops and the right bottoms to make sense of the market. And that's no fair as I see it, because it doesn't give you, you're effectively not following the rules. And as you can see, it's a continuation of pulls that brings you from where you were to where you are, which is why I started at the actual trend failure. You have to start all the way back at the trend failure, and then it's the continuation of pulls giving you these precise levels that allow you to correctly identify the highs and lows that give us our trend failure. So we had a trend failure on this Thursday, and I remember blogging about this. I was stoked that the trend failed here. So what I did is what I always do when a trend fails. We pull halfway back in the opposite direction, all the way highs to lows. As far as I'm concerned, this trend is over. Just for grins, I'm going to mark this so that I remember that that was the anchor from the previous trend. So the trend is dead to me at this point. I'm looking to short 1140. And one of the very best times to take a trade is immediately after a trend failure. It's got a very high probability of success, and it gets you in at the basically as high as you can be at the beginning of a new trend without having to pick a top. And we never pick tops here. I was taking no shorts, on this time frame the whole way up until this trend failed. Now I'm going to take a short. So my short trades, looks like I get a free trade out of it. Okay, we're looking for a minus 23% target. We come a couple of ticks shy, and we get whipsawed out. Okay, this happens. It looks like we found support at a pivot. and we got taken out. So now we could look at this as consolidation at highs after trend change. Remember how I said down here it sometimes happens. It looks like the same thing happened up here in the opposite direction. But at this point I'm kind of sitting waiting to see where we're going to go with this. Possibly it's a double top here. Okay, we blew through. So the trend continues. Even though we had a trend failure here, the trend continues. And now what we need to ask ourselves is, well, you know, we broke trend here. What the heck was this, you know, supporting, you know, what was this supporting pull here? So I mean, we can look at these pulls in an effort to find one that fits really nicely and makes sense. Sometimes it's really difficult to know exactly which one has occurred, and obviously we're trying to identify a fit after the fact, after the trade has occurred. We couldn't have seen it happen beforehand because we had a trend failure. But if we can find the correct fit here, that's a huge advantage because it is a continuation. It represents a continuation in our series, gives us our anchors for our next moves, and probably more importantly gives us a 23% target for the trade that occurred down here at 11:30, even though we might not be in that trade. So I'm not really sure what I like here. I'm going to go ahead and pull this, and we'll see where that leads us. You could also say, you know, this broke by too much for me to say that this was just noise. That's a trend break of the extension. A lot of times extensions are aggressive, so a lot of times if an extension breaks, the measured move will hold. So you'll notice that our extension was from this high before the ramp. Now that failed, we can come back to the low before the ramp, and after the fact identify, yeah, you know, we were backed up by the pivot there, but this is probably the pull we were in. So now again, we're in our box here. We're in our trading box, and price can do anything inside of here until we hit the 23% target. And we're playing the smaller, same exact analysis, but we're playing it on a smaller time frame in here. You can actually see the measured moves going on inside of here. So anyway, we're looking for that 23% target. Let's see what happens. Okay, so we hit it. Are we going to blow through it? Looks like we popped over it. So in this particular case, I'm going to look at this as a measured move that hit its 23% target. We've fallen out of extensions into measured moves, which is somewhat unusual, but with the ES being as bullish as it was here, not surprising that couldn't be maintained forever. So I'm going to remember that this was my previous high anchor in case price shoots through here without pulling back, so I can pull the next extension. But what I'm going to do is I'm going to pull up the next measured move, and this is what we're expecting. We're now expecting shorts down into this 1144 and then a continuation of the trend. Asia's slow. Okay. So we never pulled back. We completely blew through. This was our previous pull, just to show you where we were before. So we fall back to this, and lo and behold, wow, price turns around to 61.8. Remember how I said it seldom goes past? Well, believe it, because 95% of the time you will never see price go significantly past the 61.8. So this does what? This puts us back into extensions. I pull it, get rid of my old pull, And you know, this 59 here now represents the trend failure. Okay, we broke by a tick there. Okay, trend failure. What do we do when the trend fails? Well, we pull up the next move in the opposite direction. So I'm looking to get short here. Price continues down. I need to continue to pull down until we trade halfway back. On this larger time frame, we've never traded halfway back. On the smaller time frame, we traded halfway back. You know, you could say this was a measured move, which failed. Here's your entry into the new trend. Well, we were looking at a larger time frame, right? We were looking at this extension. Failed. It's never come halfway back. We keep trailing until we see halfway back trade. Okay, again, we have a trend failure. We have a bit of a crazy market. It breaks us back. Technically breaks our short trend. And you know, I can't show the micros this many days back. Maybe we would have got a free trade if we shorted here. Maybe we would have been rolled over. I can't say in this particular case, but I think it's worthwhile pointing out that we did break trend. There are programs waiting to short this level. There are enough programs sitting there to give you a free trade. And it's all about getting the free trade. If you're wrong, you're taken out, break even, essentially. Those with different risk tolerances might want to put their stops above the 61.8. Enter at the 50, leave your stop way up here. Or if you're trading SPY or SH or SDS or SSO or something like that, you have a little more leeway because there's not as much leverage involved, and you can trail your stops. So if this is just noise, you're not necessarily taken out immediately. It's a little tougher to do that with futures, but whatever you're comfortable with. Okay, so we immediately broke it back. This is an indecisive market. I'm going to pull up the next long, and I'm going to, you know, try and find again what might have supported this. So we can take a step back and we can say, well, you know, this measured move long held, and even though it blew through its minus 23% target, you know, maybe we can actually pull this as a next measured move. Well, we can, but even that more conservative pull failed. Yeah, it only failed by about a handle, but it still failed. I was comfortable shorting here. It got blown through. At this point, I would pull up the next one, and I would say that you know, our trend's probably going to continue. And again, this is literally just looking at price. I'm not looking at news events. I'm not looking at time of day. I'm not looking at gap fill trades. I'm not looking at anything. So, okay. It immediately breaks that one back. Maybe I had a trade, maybe I didn't. Maybe this really is consolidation at highs here. So this is choppy. We chop around, we go into the after hours, and it looks like we're holding our long trend here, even though we failed, again, supported by the pivot in the afternoon. Sell off into the close, it looked like. This came up and hit its 23% target. Sort of similar to what happened down here. We sold off in the afternoon, failed, and then rallied. So I'm not gonna call this failure based on this ramp here as a real failure. It's this imperfection in the market that is the reason why I don't have $1 billion in the bank right now. So it comes off our 23% target, which, you know, initially at least validates this pull, right? I mean, the fact that price reversed here where we expected sort of validates this, even though it was not very precise down below. Okay, so we hit our target. Sorry, we hit our target. what we would do is we would pull the next move, trying to see if we can get a long trade. Okay, it never comes back into our long. We've completely blown out again. So now we're in another extension. Where to draw it from? Well, it's drawn from the high before the breakout to highs. This is the high before the breakout to highs. I'm going to try and jam through this here a little quicker, and time is bleeding on here. So we were front run here, but we pulled back into our extension, 23% target hit. Let's see what happens. So, you know, what happens when a 23% target is hit, right? Same anchor, new high. Okay, so we were front run here, but we went higher still. So what I'm going to do is I'm going to redraw same anchor, new high. Until we actually get a pullback into this level, we will trail highs from that same anchor until we get a pullback. Okay, it looks like we traded there. We were very close to trading there. %, target hit. Took 3 days, 2.5 days, but 23% target hit. What do we do when a 23% target is hit? Same anchor, new highs, money in the bank. We don't go beyond it, at least not at this point. Oh, now we're blowing out. So we didn't pull back at all, and now we're blowing out. So our original same anchor, new high, if you recall, was from here to here. Which one of these am I getting rid of? Okay, we did not pull. We pulled back a little bit, and then we continued higher without pulling back into our extension long. We hit our 61.8% line, and price reverses. Big mystery, this market, huh? Okay, so you know, we do our usual routine, which is same anchor, new high. Okay, clearly that's a trend failure. We're looking for our entry into the new short trend. It can't possibly go any higher than 1209, right? Okay, so we did get a lower low here. I'm going to re-pull it from high to low. Boom, we got our entry short. I'm sitting on top of the world because I think we're going back down to a 1050 now. I'm just waiting for it to hit our negative 23% target here at 1190. Came darn close there, darn close again. Hit it out of the trade. Measured move, right? Highs to lows, 50% to target. Next measured move. Now, I don't know what's going to happen here, but one thing I'd like to point out is on a trend change, after your first completed measure move, after the trend change, a lot of times on the ES, it will come all the way halfway back from highs. And I think it does this because there are programs that are looking at even larger time frames, and the larger time frame programs have not seen the failure until you get down here. And so on a larger time frame, that failure, like a 4-hour time frame or something, that failure, you know, halfway back would be all the way from highs. On this time frame, technically, this is our next measured move at 1196, but we could come all the way halfway back. And lo and behold, we also have, well, we have a gap fill there. I don't know how significant that is. Yeah, that gap has not filled. We're coming into the morning session here. Okay, lower low, we would just redraw, you know, redraw this one, redraw this one. and we're fully expecting that the trend has changed and we're going back down. Ooh, okay, we broke our first measured move. We're thinking that's okay because we still have the all the way halfway back. The halfway back trades. Programs are trying to short it. Looks like it's going to hold for us. Tests again. Tests again. Completely blows out. So at this point, we have broken our short trend back once again. What is this? I don't know what this is. We had this. You could argue that this measured move, same anchor to new highs, loosely held, very dirty. There was an initial reaction right here. You can see we got a bounce. Dirty. I like them to be a little cleaner than that. Well, let's go back to this original anchor, this original extension anchor that we had. That trade, that trade. Okay, that's dirty too, but it also works. And we know that this anchor was used before, so let's just stick with that and assume that we are back in a long trend. That's our anchor. And we've got this great big box that we're trading in with the target way up here. Price can do anything inside of this box as long as we don't break this 61.8. We trade the smaller squiggles in here. But we know what our context is. We're aware of our surroundings. The greater likelihood is that we're going to fill our 23% target. I'm more likely to want to trade longs inside of here than shorts. But this range is so big, if we see another trend failure in here of the longs, I would definitely be interested in finding the next short, like we saw right here. Which, by the way, this was front run by like a handle. That's extremely bearish to get front run like that. But it was 4 a.m. So, okay, so let's just continue on here. We got a new high. Boom, target hit. You know, immediately when the target gets hit, we're in the same anchor, new high. I'm gonna pull it. Same anchor, new high. These are getting bigger and bigger. Now, here we are. We're expecting a pullback all the way to 96 from 1230. 1230.75. I'm not going to redraw it. You get the idea. You would redraw it. Okay, we break the smaller trend here. You know, we're in a, we had an extension here to target. Next measured move fails. All right, this was yesterday. So I think I'm going to start trailing these, waiting for an entry. Yeah, we just keep selling off. There's no entry. Straight down. This is why I didn't take any shorts yesterday. I never got an entry. Still no entry. You could argue that we had some kind of an extension short trade here, playing the smaller time frames. Absolutely legit. You can do that. But still, on the bigger time frame, we've never ever had a halfway back. Look at this though. We hit our extension long, straight down into it, and it bounced. Bounced. Ooh, fails. No, it's holding dirty. Failure after hours. This is our trend failure. It's where we are right now. Failed our trend. Next halfway back short. Last night, lower low. And I've been so busy doing this, I don't even know where trade is today. Okay, so we haven't traded this yet. We're expecting trade to come back here. The ES always comes halfway back before it continues in trend. We broke the long trend. A big giant extension long failed. We are expecting trade to come halfway back before it continues lower. So we might be trading this chop. We broke trend. We've got a bunch of consolidation junk going on down here. Everybody's confused, including the programs. But you know, we're sitting here waiting for our halfway back to trade, because that's our entry into the very top of this new short trend without actually having to pick the top. Okay, so there it is, trading. Okay, here's where we are right now today. We're inside of it. So you can see we got an initial reaction here, but that we are continuing up in kind of, you know, looks like an extension traded here or something. So again, this is just a bigger scale, but if this fails, I'm not going to immediately consider it a failure of the short trend. If we get over 1230.75, then I will say, okay, we are still in a long trend. I will zoom out and I will try and figure out what it is that supported us here. This is one possible support level. You could also argue that this, nah, probably not that. Anyway, I still see it as a trend failure until this 61.8 fails. The trend is short. To get into it now, what we would be doing is we'd be down at the tick chart level, and we would be looking at this sort of a scenario. You can see that even at this much smaller time scale, we have an extension, trades, little reaction at the 23%. It's just continuing higher, so we pull our same anchor new high. You can see it's already traded it, gone all the way through. This is so tight up here, though, I would say that the failure is actually going to occur if we break this. So if this fails, we have a micro trend failure inside of a bigger daily short. I would immediately, however low we go, I would immediately be looking for the halfway back short, and I would be taking that trade, assuming that this resistance level here is going to hold, and it has a target that is 35 handles below. So that's pretty much it for the system. Hopefully you were able to see how precise the entries can be and how these levels are respected, and that knowing where you are in the bigger picture is extremely important. There's a lot of people out there right now who just saw this as, you know, a buy the dip opportunity. You know, they don't know that the trend has failed as far as the programs are concerned, and we do, right? So they're just seeing big green candles. They don't want to miss out. What they don't know is that there's programs sitting up here ready to take all their money and drive this thing lower. And it looks like, you know, this is not as small as it looks because our range is so big, but you know, we're hanging on to a 61.8 right now of this extension. Okay, it just failed. So, you know, it's one tick. All it takes is one tick. We're really tight here. You could have an entry here, you know, 0950 with a stop at 1025, and you're not risking a lot. But the smaller the time frame and the smaller these setups, the less participation there is, and therefore the less reliable they are. Anyway, that's pretty much it. If you have any questions, go ahead and you know, email me through the Ticker Forum site, and refer to a time spot within this video, and I will be happy to answer any questions. And it looks like we've broken trend. We're just going to have to see what happens here the rest of the day. All right, guys. Later.